Hey, I just want to apologize for posting late. I've been traveling, celebrating my anniversary, and I do apologize. I'm dealing with a time change and traveling and things, and so I do apologize for posting a little bit late, but watch the video all the way through. Very important stuff. I want to show you a fascinating chart. And again, the VIX is hovering at the 50 period. If it can get the green line there, if it can get a big surge above it, we can see volatility return and get a bigger pullback. Eventually, though, S&P will move to a new high. Whether it does it now or later remains to be seen. We can get a pullback with the triple divergence that's now formed on the S&P, and then go up and make a new high as we move towards the Fed pivot. I'll be talking about the Fed pivot. You know, in 2000 we peaked and sold off. Of the Fed pivot, the market had already peaked in 2007. The market peaked with the Fed pivot. I'll be talking about that in this video, so watch the video all the way through. Important stuff. Sharing some more intraday and daily charts after that. Watching the VIX to see if volatility returns. And we'll be watching the NVIDIA earnings. Do we rally or sell off with those earnings? And that's really going to determine if we get a bigger sell-off right now, or if we try to see the S&P make new highs and try to extend the rally. Watching that, the NVIDIA earnings coming on Wednesday. Please support the channel with the link directly below. That allows me to be able to provide you this information. I don't want to get a bunch of sponsors say contact me all the time and I turn them down. I want to sell you anything, and I want to send you to websites that want to sell you gold at artificially inflated commission levels, and it's just a lot of shenanigans going on. That's that you support the channel. I put out the information. It takes a lot of time and effort to do this, and if you could take a moment to support the channel by following the link below. It's a secured site. You could donate any amount you want or make it a recurring donation. If you do that, I thank you. But I do need your help in order to make it work. Let me know you want this information, you like this information, by supporting the channel today. Watch the video all the way through. So again, sorry for posting late due to traveling, due to time changes and everything else here. Check out the chart I'm about to show you. Just a couple of minutes. Now, S&P and NASDAQ are diverging at the moment. S&P made a slightly higher high. NASDAQ made a lower high. This is what we had back over here. NASDAQ made a lower high. S&P made a higher high. And this big sell-off began to happen here. Again, 15.75%. NASDAQ has come back to fill these gaps right here. Again, I eventually think we're moving up to fill this gap at the 20,400 area, 20,398 to be exact. But I do think that, again, NASDAQ off 1% today. It sold off 204 points. I think NASDAQ, if we do have a 5-leg push lower here, as I've been saying, I believe NASDAQ peaked July 10th. I told you to be watching for that ahead of this, leading into this rally right here, because we were rallying up to those moving average or the trend lines on the weekly chart, which slammed into it, overthrew that level, which I've talked about at great length in detail, and are reversing. Here we sold off, and I told you that if we peaked, and I told you the very next day that I thought we had peaked, and that the bear market had begun for NASDAQ. I could be wrong on that if we go back up and fill the gap and make a new high here and slam up into the trend line again. But I think that NASDAQ and S&P will eventually get a larger divergence from one another. I think S&P will eventually make a new high. Whether that's now or later, we'll see. But again, if we do have a 5-leg push lower here, I think you have an A, a B, come down here, get a B, and then go up and get a C and fill this gap right here and make a lower high. And I think that could be going into the Fed meeting of the 18th, September 18th, where I believe the Fed will pivot. Again, the herd believes this is going to be bullish. I posted this chart on social media, and this chart shows the top of 2000 and the bear market that followed with the Fed pivot, and over here at the 2007 top and the pivot and the bear market that followed, and the nearly 51% crash over here, the almost 58% crash over here, which was really triggered with the Fed pivot. And when I say that, again, fascinating the responses. I got this chart right here, got over 341,000 hits so far since I posted it on Sunday, and so I got quite a bit of hits on it. And the response fascinated me because, again, I'm just showing data of what's happened. And if you could see right here, I'll talk about the response in a minute. I marked the 2000 top here. We had a topping process, but I marked the first rate cut. And by the time we got the first rate cut, we had already dropped the S&P 500 had already dropped 19.53% from this peak right here. And when we got the Fed rate cut on January 3rd, 2001, we got a 3.5-week bounce after a 19.5% drop. Okay, so we got a rebound after the crash, and really, this rally was just 3.5 weeks for the Fed pivot bounce, and then it was followed by another crash that, again, we dropped more than 20% after that from the high, and again, really ushered in this big decline and dropping 5.68%, and this slightly moved on me, and I can't fix it perfectly right now, but I measured it, and it was 5.68%, or I'm sorry, 50.68%, pardon me. Sorry, a little tired. I've been doing some traveling lately here. But again, we saw a bear market that followed the rate cut, okay? And again, the herd believes that the rate cuts are bullish. They're not. They're bearish. The arguments fascinated me when I posted this. And then again, the rate cut officially triggered the bear market. And when I say that, the rate cuts are happening. And the bear market is pricing in a recession. The Fed is cutting because we're getting bad economic data, and we're starting to see signs of a recession because, again, the market usually tops on good economic data. You start seeing some weakening signs like what we're seeing with the jobs report. Even though the unemployment rate hasn't spiked sharply, we're seeing recession indicators begin to show up, like with the Psalm rule, the 3-month moving average, as I've talked so much about, and the inverted yield curve and other things. The Fed did the pivot. This is the Fed funds rate down here. The Fed did the pivot, and again, we got a 3.5-week bounce. It's fascinating. The bounce over here in 2008, I believe, was a 3.5-week bounce as well. It's pretty fascinating. Or I'm sorry, wrong one. Up here, 3.5 week. That was 2007. Again, sorry, just a little bit tired. But what happened is that we saw the Fed over here. Again, the topping process. We saw the market peak October 11th, 2007, and we began to topping process. We got the first rate cut in September, and exactly 3.5 weeks later, we saw the market go a little bit higher. Over here, the market had already peaked, and we had dropped nearly 20%, 19.5%, and we got a little bit of a bounce with the Fed pivot, and then we saw the collapse. Over here, we got the first rate cut, and we had been rallying in anticipation of it, started to sell off, and then rallied going into that Fed pivot, and beyond it rallied and peaked 3.5 weeks later after the Fed began to cut rates. And a Fed pivot means that they start to cut rates. Fed pause is bullish. The Fed pivot is bearish. The Fed pause right now is what we have, is the Fed stops raising rates, and you get this topping process, which is what we've had here. And again, over here, when we've had the pause, the market rebounded back up. It got a lower high in 2000 with 2007. We got the Fed pause. We got this big rally, and then the Fed put in this, or the market put in this topping process, this double top, and it actually made a higher high in 2007. In 2000, it made a lower high in the topping process. We currently have an exaggerated topping process because the Fed has blown the bubble so big, and it's going to be a nightmare when this thing begins to pop. NASDAQ has already peaked. We're already starting to see evidence of that there in the weekly time frame. But here, right after we had the Fed, the first rate cut, we went a little bit higher, 3.5 weeks later, and formed this double top, and that was followed by almost a 20.5% drop, very similar to the 19.5% drop we had going into the Fed pivot. Here we had a 20.5% drop, which some analysts consider 20% or more a bear market. We got a bounce. Then we got a bounce after that, and we got a bounce, and we got a lower high, and then a complete collapse and the Lehman moment and everything else. Now, came down here, dropped 58%, but again, the Fed pivot was associated. The decline in the Fed funds rate was associated with the bear market. And this is what people don't understand. We had the comments were just fascinating because it was the same thing. Now, the herd believes that the cuts are bullish because of what the Fed did pandemic. We had the pandemic and lowered rates to nothing overnight, and then we had QE infinity and beyond. We had government of about $6 trillion or so in stimulus, 5 or 6 trillion or so, ballpark there, with government checks being passed out. And again, let me just say this: you get artificial stimulus, you get an artificial stock market rally, you get an artificial recovery that masks what's really going on. It's not real. It's cotton candy. It's fake. It's not the real deal, Don Steele. It's a fake, phony baloney, plastic banana, good time rock and roll, fake rally, fake recovery. And it's, no amount of money can stop a real recession from happening. You can postpone it. And again, we had a very, very mild recession. The real recession is going to happen. And this is what people don't understand. A day of reckoning is going to happen. The Fed is meddling with the markets with what they're doing. And again, comments were fascinating to me because, again, a lot of the comments were, well, we don't have a recession right now. Well, guess what? The stock market starts topping and selling off ahead of the recession. The Fed starts to pivot ahead of the recession. And so these people that are going around associating, they're not making the connection. They're associating, saying, well, the recession, if you have this happen, we're in a recession. No, the market prices in recession. Their comments were, in a nutshell, this time is different, over and over again. This time is different. I just read this saying, so it's fascinating because, again, that's the same complacency that we had back in 2000. I was there. There's no way that could possibly happen. This time it's different. And, Alan Greenspan's not going to let this happen, and da-da-da-da-da, and Fed's going to save us, and all the rest of it. Same nonsense. And AI, another comments, AI, we can't. And yet, again, the dot-com, the bursting of the tech bubble, they were saying the same thing back over in 2000. And it's pretty fascinating. Other people commented, well, I don't feel or I don't think this could happen now. It doesn't seem like it can happen. The stock market doesn't care about our feelings. Okay, that's emotion. Okay, the stock market is based on fact. And other people are, well, I've seen people posting charts about the Fed funds rate being bearish, and everybody, so it's not going to happen. And fascinating. It's the same. The markets are mostly psychological, and it's the same complacency that we saw back at these other tops. It's absolutely fascinating. Absolutely fascinating. But it's not going to end well. And again, the Fed is officially kept things propped up. And why haven't we had the recession yet? Because of the government spending. The government is spending more money than any time in history, more than $7 trillion a year. It's absolutely incredible because the Fed, monetary tightening, they raised rates to a restrictive level, stopped their QE, and they started unwinding their balance sheet. So they did what and we should have spilt over in recession already. Got crazy government spending and more money, $7 trillion a year. Think about that. We're adding $1 trillion to the national debt every 3 months. The next crisis we're going to have right now, going to be the commercial real estate crisis spilling over into the banks and creating a bank. But I was absolutely amazed. Again, this chart, just in 2 days, it got 341,000 hits so far. Yet there was so much complacency associated with it. Same arguments. The Fed's not going to let that happen. This time is different. AI. I don't feel it going to happen. We don't have a recession yet. It's not going to happen. We don't have a financial crisis. Well, we got the subprime, the mortgage crisis before. To have the commercial real estate crisis because the banks have massive amounts of exposure with loans and directly to the commercial real estate sector, and also indirectly through mortgage-backed securities. So it's going to just be a nightmare what's coming. And usually, again, with these sessions, there's usually a credit-driven issue, and that's going to be it. The writing's on the wall. We can clearly see what's coming down the pike. Why it hasn't hit? Washington spending $7 trillion, but right now, seeing evidence. Okay, look at the Labor Department. They've been tweaking the numbers, giving us fake numbers. They just got revised by 818,000 jobs that they overreported from March of 2023 to March of 2024. No, again, the unemployment rate is now predicting a recession is about to happen. It's not been wrong since 1970. It's not going to be wrong now. Just seeing the same complacency as, again, we're not in this phase yet where we see this massive drop yet. We're in the topping process. That's why I keep saying we're not in this phase yet where we get this massive collapse in the market. We're in the topping process. And again, that's what I've been talking about on the weekly charts for a long time. I wanted to talk to you about this chart right here because, again, the Fed pivot gives us gave us a feeble bounce, and after already collapsing and peaking, the Fed pivot was associated with the top, and it was followed by a 20.5% drop and a nearly 58% collapse in the market. The Fed pivot believes it's extremely bullish. The opposite is, in fact, true. Fed policies lead to negative outcomes, period. I wanted to share that chart with you. This chart took me hours and hours and hours of research and looking at all of this to share that information with you. Again, a year after the Fed pivot, the market had completely collapsed in these scenarios. It had already started to collapse before the Fed pivot ever happened, January of 2001. Okay, the S&P is still back testing this trend line. The S&P was down almost 18 points, 17.77 points, down nearly 1/3 of 1%, 0.32%, to close at 56, almost 17, rounding up. Again, S&P is just below this peak over here, watching to see if it turns down ahead of reaching that level and then turns back up and moves to a new high later, or if we attempt to do it right now. Told you to be watching for a triple negative divergence. We got that on Monday. The S&P 500 gapped higher, got a topping tail right at the beginning of the session. I talked about this over the weekend, forming a multiple point divergence. We now have that. So again, it is still possible that we don't reach this level, that we get some kind of pullback first, but it is still within striking distance, so I wouldn't rule that out. But again, if we do begin to get a sell-off, we could fill this gap later, or we could do it right now, sell off, and then redo it later as well. Regardless, we have a divergence that has set up, and now a multiple point triple divergence here, completing with the topping tail there on Monday, selling off and dropping nearly 18 points. Again, we're at the momentum cloud, the momentum line, that purple line right there. You start taking out that level in the 50s right below it, and the cloud right here, you start taking out those levels, then again, triple divergence could play out. If we don't, we see a rally attempt with NVIDIA earnings on Wednesday the 28th. S&P still may try to make that higher high, but you did complete the divergence I was looking for. So again, we may not do it right now. We may not fill that gap and move to a new all-time high, but do it later. That's still possible. I'll be watching the divergence do we start taking out these levels right here? Support the momentum line, the momentum cloud. If you do, then you have the trending cloud and the 50 period. If you break those levels in, again, you can come back towards the gap fill, towards the 200 period moving average. Now, if I bring it up close, you can see, again, I talked about moving up into this trend line area here, and we did that forming this divergence, and again, on the MACD as well. So again, I said over the weekend, if we pull back, it could be wave 4, could be we have wave 1, 2, 3, or 3 even here, and complete 4, or this could be a larger ABC move. Watch and see what happens with the NVIDIA earnings, but you do have this divergence giving us a topping tail today and a gap and trap on an intraday basis, at least so far. And notice the momentum line has gone flatlined. The cloud has gone sideways. We dropped below it, got back above it, and we're resting on it right now. So we lose this area. Again, you can get a pullback or you can start a reversal if that's all she wrote. Nevertheless, you've completed a triple negative divergence at this point. If we build upon that and start breaking the momentum line, momentum cloud, and the 50 period moving average, if we do, again, we got the gap fill down over here, and then we've got the gap support and the gap fill down over here near the 200 period moving average. So we'll be watching these levels. S&P 60-minute chart here, the triple divergence in place. Now, again, it was a triple negative divergence here that led to the decline here of nearly 10%. We had that on the MACD, very similar to what we have right now, and on the RSI up here, and had a sharp drop, a rebound. We were told it's over, it's over, it's over, and then in 3 days, S&P dropped 8%. I'll be watching this divergence to see what becomes of it, but we're just underneath the peak right there. We're just underneath that peak, and that's this red line right here. And again, so I'll be watching that level around the 5670 area. If we pull back and start to move towards it, or if we try to move towards it immediately, we'll be watching NVIDIA's earning results, and then how that impacts the NASDAQ and the S&P. And I believe that's Wednesday after the closing bell. Just say this, Elliott wave is speculation, and again, the market could either top ahead of the Fed pivot, which is coming in September 18th. That's what I've been expecting, and Powell has really come out and signaled that clearly at Jackson Hole in his Jackson Hole speech. But again, I talked about this being a possible fifth wave right here, right now, where we have a 1 and a 2, a pullback, followed by a 3, a 4, and maybe 5 completing, possibly, or maybe 3 up here, and now we're getting 4, and then we get a 5 going closer towards a Fed pivot, or with it. But it is possible. Again, the market can peak before the Fed ever pivots come September 18th, which is now just a few weeks away. Here we are in the last week of August. So I want to encourage you to watch this video all the way through. I want to show you what's happened in the past. So again, do we get something like this where, you know, we get a pullback, and then we go back up for one more bite of the apple there, move to a new high, and which would be this 5670 area here. We try to do it right now and then turn down and come back and hit it later or something. But again, I do expect a new high on the S&P. I don't think NASDAQ will make it. If we sell off with NVIDIA earnings, that could be the catalyst to take us back down for a large ABC move on the NASDAQ. Again, Elliott wave is speculation. I never trade Elliott wave. I use it to try to invalidate or validate counts, to try to better understand the bigger picture of what's taking place. That can be learned through the shorter term price fluctuations based on potential counts be validated or invalidated. Here it is in a nutshell. We got these gaps below, okay, and then we've got these gaps, this gap above right here from the previous peak, and that is at 56.69, 56.70 rounding up. So do we try to reach that level right here, right now, or do we turn back down, come back and get a higher low, maybe a wave 4, and then come back and make a new high eventually as we move closer towards a Fed pivot? If we reverse right here and now, then again, I'll be watching these gaps. I do think the S&P will make a new all-time high. I think NASDAQ will eventually reach that gap fill I've been talking about. It hasn't done it yet, but I think it's going to at the 20,400 area, just underneath it by a few points. These are the gaps, and again, we have several of them here. It looks like 5 that have not filled. NASDAQ, the one back over here, NASDAQ did fill that. S&P had dropped over here by 9.67%. It's rebounded to just under that level above the 78.6 Fibonacci. So again, this divergence is going to either give it a pullback and then we're going to go make a new high, likelihood, or we're going to do it right here now and form, maybe a quadruple negative divergence or something here. But again, these gaps are likely to be filled. And again, I believe S&P is in a large topping process. But as I've said, I believe it's going to make a new high. Whether that's now or later, we'll soon see. But I do believe that we will see a top surrounding the Fed pivot as we have previously. Now, we also saw with the gap and trap momentum roll over here. And again, we had this divergence up here that gave us this pullback to the 50. We gapped higher. We, again, back up to these levels, got some topping tails, and came back down. And again, consolidated further. And then gapping higher on Monday, again, which is what I talked about over the weekend, about getting a multiple point divergence here. And that did happen on Friday. Gapped higher and turned down. So again, we'll see if that we build upon that and we start snowballing lower. Do we get a reversal? Do we get a pullback? And if we do get a pullback, again, you still have the possibility of going and making new highs later with, again, a possible fifth wave if we just sell off right now and come back up and, again, have a pullback like we had right there. But with today's move, momentum did roll back over on the 60-minute chart of S&P. Now, with today's move, we do have a little divergence here on the RSI in the daily time frame. You can see it here that we did push higher, but the RSI made a lower high and price made a slightly higher high. So you do have a little divergence there that, whoops, didn't draw that straight. We do have a little divergence there that could give us a pullback, could start a reversal. And again, either just get further consolidation. If we get further consolidation, then you could still try to push up to this area and fill the gap immediately. But it is possible we get a bigger sell-off. Again, just quickly, NASDAQ is diverging with the S&P. S&P made a new high today. NASDAQ's making a series of lower highs. Gapped higher, but then, again, turned down. And again, we have these gaps down over here. Again, going to be watching. Do we get something bigger and then a pullback and then go up and make a new high and or go up and fill the gap at 20,400? Well, the S&P, I should say, makes a new high and it diverges, which again is what I think is likely going to take place. We'll be watching. We're moving towards oversold area territory once again, but again, S&P goes to try to make a new high with NVIDIA. They'll be watching what NASDAQ does, and again, it could still come back up into this area and then roll over and turn back down. I'll be watching to see if it unfolds that way. It can unfold a couple different ways, but we'll be watching the NVIDIA earnings. That's going to be the big mover this week, either up or down for NVIDIA and for the NASDAQ and market in totality. We're starting to see the weakness with the semiconductors at the 50-period moving average. So again, if they do pull back, again, could do the same thing. Semiconductors never did fill the gap up here. The NVIDIA price did fill the gap over here but the semiconductor ETF never did. It could, again, get something like that, or get a push higher and then come back down and get something like that eventually comes back up and fills these gaps on NASDAQ and the semiconductors. And I think that will mark a top. I think the semiconductors have already peaked, as I talked about back up at the top with the peak at July 11th. I told you I thought that was the top for the semiconductors. I still believe that. If semiconductors get rejection at the 50, NASDAQ might, but we'll be watching to see what happens with NVIDIA come Wednesday. Here's the RSI on the 60-minute chart. Again, we had this divergence. It's now getting a lower high. S&P is getting a higher high. So does that give us a bigger sell-off? We'll see what happens. It's still possible if the S&P tries to, with the NVIDIA earnings, and NASDAQ tries to make a higher high and make a new high, we could still see something like that. But right now you're turning down with a lower high and the two diverging, so you could start that bigger pullback now if we get more selling pressure this week with NVIDIA. And with the NASDAQ, we'll be watching to see, do we get a rally with NVIDIA and NASDAQ, or a sell-off, a bigger sell-off with NASDAQ? Again, it's still